What's up, everybody? Welcome to Toxic Hustle. Welcome to TnT, Toxic News and Toxic Trading. My name is J Tragic Jeffrey. Today we're going to talk about why Bitcoin is the leader. I'm not a Bitcoin maxi, as y'all already seen the way that we're trading bots. That I am not just about buying and trading Bitcoin, but if we are going to use the altcoin strategy that we talked about yesterday, tokenomics matters. This way you understand how far your coin is going to go and just about how much money it's going to take to potentially get there. So let us get started with the news. First things first, when we talked about yesterday, we were talking about Bitcoin, and we were talking about how Bitcoin only has 21 million. That's all it has. Now, if you understand that there's only going to be 21 million, we're going to get deeper into tokenomics as we go on. But if you understand that point, you'll understand a few things. And let's go ahead and add the reading. As Bitcoin's ETFs have been getting into play, they have to buy, unlike the futures, which futures contract means paper on paper. They can just trade paper back and forth, and it's a way to be able to keep people from actually investing in Bitcoin. When they have a spot ETF, they have to buy it at the spot price. So they actually have to buy the underlying asset to have it in these ETFs. So in doing so, over the last, this is 4 weeks ago, because I've kept this on the radar because I wanted to talk about this, but I didn't have a moment yet. But Bitcoin ETFs are sucking up, 10x more BTC than miners can produce. We talked about miners yesterday, and I talked about the infrastructure of mining. We talked about the hardware, and we talked about how much these miners have to make just to be able to break even on the hardware, and every X amount of years they've got to buy new hardware because how much they make keeps decreasing moment after moment. And I showed you in the video how fast, within 20 minutes, how much they were able to make kept dropping and dropping and dropping. Spot Bitcoin exchange traded funds, or ETFs, scooped up 10 times more Bitcoin than what miners are able to produce on Monday, February 12th. According to preliminary figures, at least 493.4 million, or roughly 10,280 Bitcoin flowed into spot Bitcoin ETFs. BlackRock iShares Bitcoin Trust saw the lion's share with a massive 374 million. Meanwhile, Fidelity, Grayscale, Invesco, all these people, all these ETFs are getting millions, as you can see, all these M's, millions of cash to go into buying up the underlying asset. On the same day, Bitcoin miners produced around 1,059 BTC, worth around 51 million, according to blockchain.com, which is just 10% of the amount of Bitcoin being hoovered up by the ETFs. A similar trend was also observed on February 9th, where with approximately 12,700 Bitcoin, or 541.5 million worth of asset flowing into ETFs. Total circulating Bitcoin is the blue line, and then there's the market price. So the total circulating Bitcoin. So what we're seeing is inflows. They're scooping up 10,000 Bitcoin as of February 12th, with only 1,000 being generated. That's why they said 10 times the amount is being bought up. Now, will this slow up? Of course, it will slow down a bit. But we've got to see that there's, again, only $21 million, only 21 million Bitcoin that will ever be minted, and 19 million have already gone out the door. So this is unsustainable. And what that means is we're going into what? Scarcity. We're going into supply and demand economics or tokenomics, right? Supply and demand. We have a low supply. There is a high demand, which then dictates what? Prices must go up. This is also why Bitcoin's price keeps going up and why hardware, I showed you the hardware miners, if a person's going to spend tens of thousands of dollars on multiple hardware rigs and have to upgrade every 2 to 3 years and buy new machines, they're doing that with an expectation of profit. Micro Sailor says that Bitcoin ETFs are starting to compete with the S&P 500, which is true. This is important, and this is also validation to what we talked about yesterday. Riot Platforms on the NASDAQ, Riot, mined 418 Bitcoins in February, down 20% from the previous month and 38% down from the previous year. What did we talk about yesterday as to how hard mining is? Every single day, miners have to either buy more equipment or they will see this exact situation happening. Either you're swapping out your equipment for new equipment, but you still have to recoup that equipment. And we saw that it's going to take X amount of time. There's an X factor of how many, if you're only making, say, $6.80 something cents worth of Bitcoin per day in a fully optimized and decent rig, and that number goes down day by day, and you paid $5,000 on the rig, how many days does it take before you can recoup? And how many days will it take before not only you recoup, but now you make enough money to potentially buy another rig? Or are you taking out a loan for it? Which is what a lot of people have done. And that could either come back to bite them through this next halving cycle, and we'll see what happens once the amount of how much they make in Bitcoin drops in half. The cost or price of Bitcoin has to jump up to make it a feasible and sustainable thing. This is why Bitcoin's price is the way it is. Its deployed hash rate, which we talked about terahashes and how much hash rate, was 12.4 exahashes per second, which is what, 1,000 terahashes. Unchanged from January, so that means they didn't put any extra machines on. So now when you're reading certain things like this, after I showed you that video yesterday, now does it kind of make sense as to why I do the trading strategy I'm doing? Here is a mining company who, if you look at the fact that their exahashes has not changed from January, means that they have not onboarded any new machines to make more cash flow or to make more hash rates. And it's up 9.8 exahashes in the year earlier period. So it hasn't changed in the last month or so. So of course it's going to be down, but it's up slightly from them buying machines last year. So they bought some machines and it's up 9.8 exahashes, which is basically what? 9,000 terahashes over the earlier period, which means maybe what? If we saw that one miner was 200 terahashes, so they've got like X amount of machines that came in there, not like a crap load of them. The installation of 31.5 they have the installation of 31.5 thousand miners that Riot recently purchased will increase our mining efficiency and uptime and will further expand our hash rate capacity at our Rockdale facility to 15.1 exahashes. So they'll go up that, which is expected to go in Q2. So again, they've taken out a whole bunch of cash flow or got more investment money, investors, to be able to buy more machinery. But they're doing it on, we have to look at their actually books to find out how they're pulling it off. Are they doing it with debt, or are they just doing it with corporate bonds? But we'll have to look at that. That'll be another thing that we actually do. This is what we were talking about yesterday. Down the pan. I was a Bitcoin millionaire, but now I've lost it all because I forgot my password just as crypto hit an all-time high. And we talked about this. He said he lost a huge sum of Bitcoin, or Bitcoin Cash, which is not really Bitcoin. See, this article is a little misleading. Let's see if he actually lost Bitcoin or if he lost Bitcoin Cash. In Bitcoin. Okay, so it says it's in Bitcoin, but for some reason, when he rebooted his computer and he could not remember his passwords. Speaks undated footage. The influencer said he lost more than $1 million in Bitcoin. Claimed he asked a friend to save some files before formatting his machine, but the friend forgot and deleted all the files on the system, including passwords to his cryptocurrency wallets. Never keep your wallet information on the machine that can be formatted. Put your wallets, 10 Bitcoins. Okay, so it was 10 Bitcoins, currently worth 66. So yeah, it was Bitcoin. It wasn't Bitcoin Cash. So he lost Bitcoin. And this is what I told when I said to you in yesterday's video. I said that at least 6 million Bitcoin is gone. And here, if you look up in Google, total lost Bitcoin, key takeaways, and this is from Make Use Of. Lost Bitcoin refers to BTC that the current owner can't locate either because they forgot their private key, their seed phrase, or lost their hardware wallet device. Estimates suggest around 6 million Bitcoin, or 30% of Bitcoin's supply, have been irreparably lost, amounting to $554 billion in value. This is why you need to have some form of backups to your keys, and you need to have it in multiple locations if possible, safe locations. So I wanted to put this here as a learning experience so people can see what happens if you lose. Like when I tell you that $6 million, 6 million Bitcoin, not $1 million, but 6 million Bitcoin is gone, he's adding to that number along with tens of thousands of people that do this every single year as they get into crypto. And another thing that I want to show you as well is another problem for miners. And again, why I do the trading strategy I do. After 3 years ago, Bitcoin miners flocked to the state of Texas. The Lone Star State offered cheap power, plentiful supplies of renewable energy, and accommodating regulatory climate. Some mining companies have already operated there, but when China banned crypto mining, there was a mass exodus. What I showed you in videos with Crypto Plunder, I showed you 2 years ago about China leaving and the fact of how they were putting their mining rigs here in America for the cheaper electricity. Texas residents have complained that industrial-scale Bitcoin mines are driving up energy prices and destroying the quality of life of those living nearby. Meanwhile, politicians are demanding clarity over crypto mining impact on both the environment and the stability of the ailing Texas energy grid. In February 22nd, the Texas Blockchain Council, or TBC, a pro-mining lobbying group, filed a lawsuit against three parts of the federal government: the U.S. Department of Energy, the U.S. Energy Information Administration, and the White House Office of Management and Budget. It objects to an emergency data request initiated in January that required mining firms in Texas to disclose details about their energy usage. Riot Platforms, which we just talked about, which operates North America's largest Bitcoin mining facility in Rockdale, Texas, is a co-plaintiff. So this is what I'm telling you about problems right now, as they're making it harder and harder for smaller companies. They don't give a damn about smaller companies or any company on the stock exchange. They want to control the infrastructure. We talked about that yesterday. And in controlling the infrastructure, they are willing to burn and pillage a couple of these companies to make it harder and harder for them to be able to do it. Because I told y'all that the banks want in. As soon as they're able to they're already making crazy money on these ETFs. They're going to have extra cash flow, and their next position is what? Buying the mining rigs. Then, just like Bitcoin, not having an ETF until the banks were ready for that, and they had already bought since 2017, since 2016, buying up BTC, they were buying it, preparing for that ETF. And all ETFs got shut down until when? Until the banks were ready. And then the banks told the SEC, you're out. And then, boom, now we have our ETF. The same thing's going to happen with mining. Yes, these were the first people in, but it doesn't mean they're the last money. The money that where the banks are going to make their cash flow is the banks that are putting their money behind who they want as the mining facility to run the mining rigs. Because they may not want to do that themselves, but they're going to make sure that their stooge company is the one that benefits so that they could mine Bitcoin and be making not free money, but cheap money, because they can do all the legislations for everything else, the environmental, all of that. So this is, again, why I'm using trading bots. I'm not trying to mine it myself. I'm not trying to go through the hell that may get slapped down with them being like Texas during the heat wave told all of those people, shut down your miners. The same way that the water in California, the farmers in California were told to stop watering their fields. If you don't control the grid, well, then your business is dictated to you by the infrastructure, by the powers that be, or your government. So since that is a risk factor, I don't want to mine it myself. And if I know that's going to be a problem, then I'm going to find a way to be able to make or altcoin mine or do my trading or be a market maker. And it's my way of mining without all of that undue risk. And I showed you all of that. I showed you how much it costs for your equipment. I showed you your price per for electricity, and now you're seeing residents push back that's saying, hey, it's causing us to have problems, and that means the prices are going up, and that makes how much you're making per hash less and less and less as the rates go up. And then summertime, you pay more for electricity. So it's the same problem. So again, this is another not red flag, but this is another ding on jumping into the mining side of this business. And I have miners with other coins. And again, they don't do as well as what I do in trading with Bitsgap. So let us start talking about fundamentals, tokenomics, because I don't want to let this run too long. Bitcoin, we talked about when you go to CoinGecko and you type in Bitcoin, you go down here on your left side, you're going to see tokenomics. Total supply, this is how much is going to be the total and max supply. Your total max supply, 21 million. Total supply, 21 million. How much is out? 19,446,456. So you already see how much is already out, circulating inside the crypto economy, and you can see that as I told you, the last Bitcoin is not going to be mined until 2140. So we'll prove it real fast. 2140. By 2140, 21 million Bitcoins will be mined, enhancing the network's scarcity and value. Miners' Bitcoin rewards decrease after every 210,000 blocks mined in an event called the Bitcoin halving, and by 2140, miners will rely solely on transaction fees. The last Bitcoin will be mined 2140. Tokenomics are important because if you're looking at something like Shiba Inu, let's look at its tokenomics. The circulating supply is 100,000 million billion trillion. I'll do that again. That is hundreds of thousands. That's millions. That's billions. That's trillions, 589 trillion in circulating supply. The total supply is hundreds of thousands, millions, billions, trillions. 999 trillion total supply. Now, I know they're doing burns, and I don't know if those burns, because if we go over to tokenomics, if you scroll down, you got the about, and then you have the tokenomics. Half of it was given to Vitalik Buterin, who's of Ethereum, one of the founders of Ethereum, and half of it went into Uniswap liquidity, which is a decentralized exchange. Now, with that, Vitalik donated 10% of his SHIB holdings to COVID relief, and then the remaining 40%, he threw it into what's called a burn wallet and burned it. So half of those tokens are destroyed and will never be seen. And of course, they're doing some type of burn tokenomics. So what does that mean? It means that if you're looking for how far Shiba is going to go, please don't expect Shiba Inu to act like Bitcoin, because Bitcoin doesn't do it does millions, it doesn't do billions, and it doesn't do trillions in circulating supply or total supply. And while, let's say, half of this is gone, or 40% of this may be burned, or even up to 50% may be burned, that's still a high circulating supply still flowing around, supposedly. Supposedly there's been burns and all these people burned, but again, we have to see. Now, what does that mean? So I go to Twitter and I type in SHIB, and I type in and go to the top. And what I'm looking for is, where do they think Shiba is going to go? So they're saying it's going to go at least to 1 cent. That's where they want it at. Now, I equate this to Bitcoin maximalists saying that Bitcoin's going to go to $1 million. Not to say that it's not going to go there, but it's not going to go there this cycle. It's not going to go there potentially next cycle. Next cycle, we may get a $250,000 Bitcoin. This cycle, we may finally hit our 100,000 and change Bitcoin. Next cycle, we may hit 250,000. The cycle after that, we may hit 500,000. May. But that's a lot of cash flow that's got to be flowing into Bitcoin to be able to do that. But that's with banks jumping in. That's with countries jumping in. What country do you think is buying Shiba Inu and putting that on their books? What country, what bank do you think JP Morgan, after all the crap they're talking about with Bitcoin over the last 5 to 6 years, do you think JP Morgan is going to buy SHIB? Do you think there's going to be a SHIB ETF? No. Just like I don't believe there's going to be a Dogecoin ETF. And Dogecoin is the Bitcoin of meme coins. So to say that this is going to get 0.01, you have to look at where's the price right now, how many trillions of dollars, $8 million is circulating in trading. The fully diluted value, the market cap right now is, let me see, market cap is the current price times the circulating supply, right? So the market cap right now is $19 billion. So you're thinking, and that's just getting us to 0.3359 Shiba Inu. So you're saying that this needs to be, we got to go this zero, this zero, this zero. We need 3 more zeros to get that 0.01. You need 3 more zeros. The market cap needs 3 more zeros. Period. At least 2 more zeros. See, I would surmise. But if this needs 3 more zeros, then this needs 3 more zeros. Where is that cash flow coming from to get to that 0.01? There is your hopium. That's why I don't do hopium. Now let's get into trades. We've got pumps getting ready to jump in here. Pumps jump up to get beat down. We are back where we were. Let's go on the daily. You can see yesterday I told you we're taking a breather. But that breath was 1 into the 2, 2 into the 3. Then you gotta breathe. It came right back. And we're already, if we look at this, close to smacking our head back up at the top of this daggone resistance line. With a dip that far out, and potentially within 1 week, 2 weeks, cyclical surges before that next fall down. So we might get above this line only for it to get pulled back down to this line again. We'll see. But then you've got that halving cycle. And then after that halving cycle, we may get a dump. Buy the rumor, sell the news. But I don't know how far it's going to go because, again, as we saw, the ETFs are buying everything up at the end of the day. And then if you look at the volatility on our screener, you'll see Shiba Inu is at the top of our volatility on the day at 29.37%, which is why, again, Shiba Inu stays on our radar for because volatility is how bots do well. Bots do well with volatility? Let's take a look at our Shiba Inu bot. 116, 8 days, 116 with $221 in current value. So that is our current trading value is 221. In 8 days, it's doing an average daily of 6.05%. We're looking at a bot profit of 48.85% or $116.46 bot profit. If we're looking at what, because we have some trades going in. So you can see we still have some trades that are up here that as it fell down from these, like as we bought up here, we have to wait until we get across this line again and then start going, break even. So that's why this number here is a little bit lower, where we're only at 98.76 total profit. But the bot has traded at $116. Now I want you to see something with the Bonk trade that we did just 2 days ago. Volatility is your friend. And again, if we go into our volatility list and we scroll down, actually BON, there we go. There's Bonk right here with a volatility of 30.50. So again, higher. It's not all the way up here, but it is 30. There we go. It is 30.50% in volatility on the day. And that's been consistent week over week. We're seeing that Bonk has the volatility necessary to keep going. And again, once Bitcoin begins to make its run up again and begin to go get these higher highs and get above our levels. So if we go to our monthly, if as long as we stay above this line and we close this month above this line, that is going to be huge for Bitcoin, especially if we get above this line, because then you're at all-time highs. Here is the all-time high right here, around 69,000. Once we cross that, we've been tapping on it. Once we cross that, and potentially this surge can get us across that. Once we cross that line, things begin to get stupid. So if you have not begun looking at your Bitsgap bots, I would suggest you start begin to look into trading with these bots. Again, you start a new bot, you hit your grid bot, you choose whatever token you're going to choose. So let's say I'm going to choose RNDR USD. You bring, because we're in a bull cycle, not a bear cycle, I bring it down from the tops. Then what I'm going to do is put it on the day. I'm going to find a good bounce point, which would be right around here, is a decent bounce point where we see touch points on the day. I'm going to manually adjust this so that it's 1.89% per grid. So when we're trading, we're going to be trading with 1.89% of our capital. So you can see that with if with a $200 and something investment, I can go ahead and activate this bot right now. Now I wouldn't be trading on render because I don't have the volatility, right? So let me look at find RND. Render. Oh, well, actually, render wouldn't be a bad move. Render's volatility is actually not that bad. Render has 48.19%. So yeah, this would be tradable. I would actually trade that. But I'm getting lower cost. I'm looking at that. I've got my next video. I'm gonna do another video today on adjusting your Bitsgap robot, and I'll also probably do an adding of render to the trading cycle, because render is an AI play and a GPU play. But we'll talk more about that in the next video, because again, I don't want to run this too long. But SEI, I'm going to do a video specifically in Bitsgap showing you how to adjust your robot. 2 ways to adjust it. Either adding more liquidity and adding more capital to it, which I'm not going to do because it's already at 405. What I'm going to do is show you how I'll stop this bot, reset it so that I can take advantage, and let me show you why. I'm going to take advantage of all of this now that we're back down here. I want to get more pips and also more grid lines, because I think our grid lines are too short. I want at least 30 grid lines. So what I want to do is, instead of the 14 that we have here, which was our ideal strategy for when we're in a crypto winter, because I did this 2 months ago. So if you can see that this bot is over 2 months old. So it's done pretty well, $251 with a 405. It's currently sitting at 405. We're going to go ahead and run a new bot, get that bot trading down here, and get that bot buying and trading and moving in and out of these markets at this lower price point for now. Because I want to at least have, like I told you before, set this up so we can capture more downside. If instead of what we did with crypto winter was trying to only, if it falls out of pocket, we would then either adjust it and trail it down and then buy back in, or we would adjust this to the upside. When we're in a bull market, we adjust it to the upside, which I'll show you in the other, which I showed you with the Bonk video, where I'm adjusting for downside, not just upside. And then in a bear market, I'm adjusting only for any upside we may get, but not taking the risk of having it buy up all this downside. Because you could, in a bear market, you could keep you could keep catching a falling knife. And I don't want to do that. I want to be able to make sure day after day, where are you bouncing at? Where are you sitting at? And like how it just fell out of here over days. You can see 1, 2, 3. We kind of, like, where were we? Right here. 2 to 3 days, we fell out of here. And then now it's kind of rising back up. But now I want to catch it down here to ride up. But we'll get into that into the trading video, which I'll do later for SEI. And then we'll also look at render and do some tokenomics on, not tokenomics, but we'll do some due diligence on render so you can see what it is and why I'm interested in putting it on a robot to trade. All right, so I'm going to cut this video from here. I want to thank y'all. Make sure you like and subscribe. Make sure you share this with folks. I appreciate y'all so much. I'm hoping that all this information is beneficial to you, and I'll talk to you another day. See ya.